Yeah, thanks so much for coming on. I've been following you with lots of interest, and all the other guys at Kit Analysts, right? And I think even within the past year, you guys have become a formidable force. And we'll definitely talk about that, because I think it's very interesting how, the whole open source, decentralized nature of Bitcoin has also permeated into the investing communities, which I think you are a leading figure in. So we'll touch upon that. But I was thinking maybe interesting to start with, talking about why the use case of Bitcoin for an individual is basically the same as for a corporation. Like I kind of always describe it as like lower the uncertainty towards the future, so you make sure that you survive. Yeah, you can probably explain that more in detail, why that's of course also important for corporations, and then capital allocation. I think your insurance angle is very interesting, by the way. So maybe that's a nice start.
Absolutely. Let's get into it. And, it's timely because I'm moderating a panel this weekend at the MIT Bitcoin Expo on Bitcoin adoption for corporations. And I think it's this phenomenon that's occurring and happening across the globe as companies are posed with the question of, how do I protect my treasury and how do I protect my assets so I can operate into the future? And, in the case of strategy, they were at the situation in 2020 where they were looking at this big pile of cash and struggling to see, recognizing that there was going to be inflation on the horizon, and recognizing that they were kind of stuck in their business operations unless they did something. They were trying to find out, okay, where do I invest all of my money? Do I invest it in computers or, real estate, or, what do I do, recognizing that the world is changing in front of my eyes? And in that analysis, they recognized that Bitcoin was the best possible place to park their money for a long-term store of value to help, make the company withstand changing market dynamics and changing market environment. And so where we're at in this new future, we've got first movers, right? Strategy has been a first mover, and now you've got a dozen companies that are adopting a Bitcoin Treasury strategy or leveraged Bitcoin Treasury strategy. And what we're starting to see in this evolution of the space is that companies are very levered and focused on a heavy Bitcoin Treasury strategy. And then there are some other companies that are adopting this as a diversification of assets moving forward into the future. So that's where I think a lot of these companies are going to start dipping their toe in the water of adding Bitcoin on their balance sheet, is just allocating 1% of their portfolio or 1% of their cash assets into Bitcoin, recognizing that there's a lot going on in the global macro landscape and the political landscape, not just the US, in other nations as well. And there's this opportunity to have this diversified asset that's got a finite supply and may continue to outperform, all other potential assets that you may be able to hold. So there's this constant, when you're running a business, there's this constant opportunity cost of capital equation that you're faced with. If I've got, just a few options I can do with my cash. I could hold my cash in cash. I could reinvest it into the business. I could buy the stock back or buy a piece of real estate or, whatever that may be. And now you have this new alternative where I can park money in a finite asset, a finite digital asset, a commodity that has potential price appreciation, and it's likely going to outperform all other products. So in fact, I just started another podcast with Ben Workman, Tim Kosman, and Matt Cole, Strive CEO, called the Hurdle Rate Podcast. And we explore this very topic where, there are some companies that are starting to explore Bitcoin, the performance of Bitcoin on a long-term horizon, as the hurdle rate for alternative investment. So some of the questions that the CEOs are asking is, somebody comes to them with a proposal of how to run a project that they should work on. And the question back to them is, will this beat Bitcoin?
Yeah.
And I think that's a valid question that some of these companies should start to explore and think about their opportunity cost of capital in that way. And one of the big hurdles that a lot of these companies have been faced with historically is this just legacy framework of quarter over quarter performance or year over year performance. that has just been in place forever, right? Like the stock market's really focused on earnings per quarter or earnings per year, or whatever that may be. Whereas if you zoom out and you look at Bitcoin's performance, you look at it on a 4-year horizon or a 5-year horizon, and you start to see it as a duration asset, similar to something like real estate, right? You're not buying a piece of real estate in a month and selling it the next month. You're sitting on it for a decade. And because it's digital and fast, it's a digital and fast economy, people see it as a digital and fast asset, but it can have a lot of value on a balance sheet as a duration asset or a long-term asset, similar to real estate.
Yeah. I find it so interesting, right? Because, the question was like, what is the difference, or I'd say what's the same thing for like an individual and a company, right? And it's more about, if I have money today, but I don't want to spend it today, what do I do with it, right? And I think for companies, it's probably way more apparent. I think also because they operate in an environment, as you just mentioned, of growth, right? Like it's basically forced growth, which, we could go into, but that's also kind of like a fiat symptom in a sense, right?
Yeah. So fiat. And
so it is way more apparent for them that when they have cash, they need to figure out, okay, what do I do with it, right? And I think, Saylor famously explained, like, I went through everything, stock buybacks, acquisitions, and all these things, right? When he explains how he ended up with Bitcoin. So I don't think it's actually surprising that companies are starting to do this, because, where I think, individuals could be enticed by new sneakers or, some fun gadget or a new Nintendo or whatever to spend their money on. In a sense, company leadership is already focused on a bit more longer term, perhaps, than just, the general individual. So their use case is way more apparent. And yeah, I love the hurdle rate idea because, and again, I think with companies, it's more apparent that if you don't have Bitcoin as your hurdle rate, it becomes really, I'd say, more unclear if you're making the right investments, basically. And when you put Bitcoin as the hurdle rate, I actually talked about this last week when we talked about startup investments, for example. Like it's the same, basically, right? So I told you just off mic, like I have a background in like the Web2 startup world. And that's like a spray and pray game, like the whole VC game. Right. That's literally a Ponzi, or pyramid scheme. Just bad ideas get funded. And once you take Bitcoin as the hurdle rate, you're just becoming way more diligent as to what am I spending this capital on. That's also something I learned along the way. Capital is basically economic energy you, pile up in order to eventually invest, into something.
Right.
And
the underwriting of the deals gets much sharper, right? When you think about Bitcoin as the hurdle rate, you're like, okay, I need to be a lot sharper in how I'm thinking about things. And it seems like the last decade of VC has probably gotten a little loosey-goosey.
We're going viral. Our growth strategy is going viral. Like that's what they said, and then they're like, "Oh yeah, that sounds great."
Sure. Here's $10 million.
Yeah, exactly. Yeah. Well, and that's also the problem, right?
Yeah. Yeah, I think it might be helpful to for your viewers to understand like financial companies as well, right? Like, I think it's pretty easy to conceptualize a company, I don't know, like just any typical corporation adding Bitcoin to their balance sheet, like Nike or something, right? You sell a product, you have net income, and you store some of your net income in Bitcoin, right? That's like a simple perspective of how a company works. Now, there's this whole separate realm of companies that everybody's familiar with, but probably doesn't really understand the design of these companies, and it's insurance companies, banks, and pension funds. And so, insurance companies, how insurance companies work, and I think the design here is really important in understanding. So, how insurance companies work is they are collecting premiums in day one, right? So like when you pay an insurance premium to an insurance company, that company is collecting the premiums and they're investing those premiums over time to pay out a future claim, right? So they know that you or somebody else next to you is going to make a claim at some point in the future. And there's a whole bunch of math that goes on behind the scenes where those insurance companies are calculating like, okay, what what are my claims going to be 10 years from now, 5 years from now, whatever that might be. And so when those insurance companies make those decisions and make those calculations, they buy different types of assets. So, they may buy 10% of their portfolios and in equity, and then 70% of their portfolios in bonds, and then 10% is in treasuries, and different things like that. And every insurance company is designed differently. Now, every single one of those insurance companies subscribes to the concept of Markowitz modern portfolio theory, which means if you have a diversified pool of assets, if you add a new asset to that diversified pool of assets that has different risk return metrics, it improves the return and reduces the risk of your entire portfolio. Okay. Now enter onto the scene Bitcoin, right? Bitcoin is unlike anything else in the market, right? It's got a completely different subset of people that are investing in it, buying it, going in both directions. And it's got a different risk return profile than any other asset in the entire market. A lot of people are mentioning that it moves similarly to QQQ or, risk assets or whatnot, but there are days where it doesn't. And so when you think of Bitcoin as a new asset class with the different risk return metrics, it is the perfect asset to add to a diversified portfolio or a pool of assets, especially if you're thinking about having to pay out claims at a point in time in the future.
Bitcoin custody is evolving, and while self-custody is important, it has its own risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your custody setup. OnRamp secures your Bitcoin in a segregated cold storage multi-signature vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Your funds are fully auditable on-chain, cannot be rehypothecated, and can only move or withdrawn at your explicit direction. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. Bitcoin is money, and as the price continues to appreciate, OnRamp helps you seamlessly tap into financial services like trading, inheritance, insurance, loans, IRAs, and more, all without compromising on security or accessibility. Check out onrampbitcoin.com through the link below and schedule a consultation with the OnRamp team to get to know them and learn more about their offering. Bitcoin is financial sovereignty, so why compromise when you need liquidity? Meet Debify, the Bitcoin-backed lending platform built by Bitcoiners for Bitcoiners. Debify connects you to institutional-grade liquidity and allows you to borrow fiat or stablecoins, all while keeping your Bitcoin 100% under your control through a non-custodial 3 out of 4 multi-sig escrow solution. Get competitive rates from a global marketplace of lenders with loan terms you choose from 1 month up to a year. No hidden fees, no rehypothecation, just pure Bitcoin-aligned lending with the highest level of transparency and security. Ready to unlock liquidity without ever selling a single sat? Visit debify.com/offers to explore their current lending offers. That's debify.com/offers.
Yeah. I wanted to touch upon insurance because I heard you say in another podcast, you have an insurance background. Yeah. How do you model for the future when, the money is being debased even more rapidly? Like how do you plan 20 years in the future? And that's when I heard you make the use case for Bitcoin for also insurance companies. So I found that super interesting because there in that business model it's even more apparent to have, this is a simplified version, but to have an X amount of dollar units, to be able to pay for what you promised to pay for, right? That's the value proposition of an insurance. And I think it's again similar to for individuals.
Yeah, it's an interesting phenomenon, and I think that's in that calculus, right? I don't know how many insurance companies there are in America. Thousands, right? Like there are thousands of insurance companies in America, and if you think about each one of them is making their own calculations on what their claims are going to be in the future. And there are people that are making those calculations, right? And if your calculations are off by 25 basis points on like what you think the claim is going to be 10 years from now, your business model doesn't work.
Yeah.
Right. And so we're seeing that kind of happen a little bit over time where, medical claims inflation is outpacing the the CPI, and these insurance companies are grappling with CPI figures. How do am I getting all of these numbers right? And something we've seen in the insurance industry is this concept of social inflation, which is really, in my opinion, just a debasement factor, where the insurance industry is claiming that these claims are larger. Like some of the claims that they've had are larger than they've been in the past because of these jury verdicts that they've had, which have been significantly larger than the past. In my opinion, the jury is just understanding that there's more money in the system and saying that, like this claim should be a $5 million claim, when in the past it should have been $2.5 million claim.
Yeah.
So this is happening on a massive scale.
This is play fiat games, get fiat prices.
Yeah,
exactly. Right. Yeah, 100%. But people, this is, I love. Sorry, I wanna point this out. Like, this is the zero-sum fiat game mentality, right? Yeah, just because the money is there, I should take advantage of the fact that there's a big pool of money and it should be claimed, basically.
Right. Yeah, it's there are some challenges with the insurance industry, right? This is a financial business that can greatly benefit from adding Bitcoin to their balance sheet. Now, here's the problem: is that insurance companies, if they were to add Bitcoin to their balance sheet, they get zero regulatory credit for it. Zero. So that means you have zero ability to lend against it. Right? Like, you have zero ability to leverage against it, like on your portfolio, like how much premium you could bring in the door, how much risk you could bring in the door. You have zero ability to lever against it. Now that's a really big problem, right? It's like, well, here's a new asset class that I need to add to my portfolio, but the regulatory environment has created a lid on innovation, and it's a fascinating conundrum, and the industry moves so slow. It's probably going to take a long time before regulators or rating agencies understand that this is a really valid form of capital that can be used with a long view horizon.
Yeah. And so why is it so interesting then to use Bitcoin as a collateral or use it as collateralization of the balance sheet? I mean, just as individuals, are buying real estate and stuff like that, why is specifically Bitcoin so interesting for companies?
Yeah. Well, it is a powerful form of collateral. And I think, just kind of going back to this concept of this insurance company, just to finish this thought here, they can't add they can't add Bitcoin to their balance sheet and leverage against it. But you know what they can add is publicly traded equities. They could add preferred stock from publicly traded equities. They can add convertible debt from publicly traded equities. They can add debt from publicly traded equities. So now you've got multiple different vehicles, right, that can provide Bitcoin exposure. So these insurance companies, for example, they can explore adding assets like MicroStrategy's convertible debt to the balance sheet or the preferred stock. And all of a sudden you're getting proxy Bitcoin exposure, and you get credit to leverage against it. And you're filling this product market need, right? Like the insurance industry needs this product, and Strategy is saying, perfect, I can design and create this product and deliver it to you so you can get your Bitcoin exposure on your balance sheet, fit within the regulatory framework, just basically get around those regulatory lid on innovation and have that exposure to your company. The industry hasn't figured it out yet, right? Mm-hmm. Like 99.9% of the insurance industry probably doesn't hold this stuff on their balance sheet, and I think they will, and they'll largely wake up to it in the future.
Do you think there's like a catalyst for that? Like, when the money printer goes on again and they realize that their problem is actually probably bigger than they thought before? Or like, what do you think?
Yeah, it could be pain in the market, which is kind of what you've indicated there. That's a deep question. And
okay,
that's a really deep question, and my brain is going a bunch of different ways.
This is a rookie question.
So. Yeah. So just to not to get too complicated, but with the insurance companies, right? You have this expectation of how many claims you're going to pay out. You get the premium in the door, you're going to pay out claims. Now, there's also the second layer of insurance called reinsurance, which is insurance for insurance companies. And I'm not going to get too deep, but it protects against volatility, right? So if you're an insurance company and you have a hurricane hit your entire portfolio in Florida, you go, oh shit, I have to liquidate all my assets in order to pay for my Florida hurricane claims. So what does the insurance company do? They buy a policy from the reinsurance market that protects them against volatility on their balance sheet so they don't have to liquidate all their assets in an individual time. So within the reinsurance market, is very fluid and with far less regulation in the entire market. So the reinsurance market can move and reprice things very quickly within a year, right? The reinsurance market can move and price really quickly, whereas the insurance market is incredibly regulated by the state and their rating agencies that impact how much you can raise rates and charge and do all of this stuff. So if there's large capital draining events in the market on top of an inflationary like money printing scenario, let's say you've got an earthquake or a big hurricane hitting Florida or wildfire in Southern California, or these big capital drains on the market, the reinsurance market is going to reprice that very quickly. And when the reinsurance market reprices, that flows through to the insurance company's P&L, like their profit. And so they've got to be able to charge that in underwriting, and their whole calculus of like how much money they need at a future point in time is revamped. And so like it will take pain, whether that be inflationary environment, catastrophic disasters, or some combination of the two of those, in order for these companies to react, probably to see like a big large scale reaction, I would suspect.
Yeah, it's very interesting. Again, I think it's similar for individuals, right? Like we can talk about Bitcoin for individuals, we can talk about Bitcoin for companies, but as long as people don't understand the predicament they're in, then
don't understand the problem, right?
Yeah, exactly. So that's I think also why Saylor is eventually so visionary. And I wanna dive into MicroStrategy, but first, he was the first. Now, as you mentioned, he has more products, right? He's making basically very specific financial products to raise money to eventually buy Bitcoin, right? They have Stark, they have Strive. There's other companies like Metaplanet, Semler Scientific. There's many other companies that are following. Rumble, I think, is a company that many people might know. Yeah, where is this going? I mean, GameStop, last week shared that they're going to put Bitcoin on the balance sheet. Yeah, can you share a bit about this development and where do you think this will spread further?
Yeah, it's developing very quickly, and I think everybody we're in this modern society where everybody thinks things move like really really fast, right? Like if I make an order on Amazon, it shows up to my house in less than 24 hours, right? Like we're in this like fast moving ideology economy, but the reality is some of this stuff takes time, right? Like communicating with your board or making changes to your business model or understanding that I need to change my business mix or like sell a piece of real estate in order to buy Bitcoin or whatever that might be. That takes a lot of time. And where I do think this market is going is that we're going to see significantly more corporate adoption of Bitcoin on the horizon. And I know there are a material number of people that are working in this space to basically tell the market it's okay to dip your toe in the water here, right? Like the water's warm, like come check it out. And it requires a bunch of people talking and communicating about what can this asset be, right? You have to tell the story of the asset. So a lot of people are working to tell the story of the asset, what it could potentially be, how it could benefit your company, how to think about it as a long-term asset and a network asset. Tell them some of the basics, right? Like this thing isn't going anywhere. It's backed by math. It's backed by the largest decentralized computer network on the planet. And getting people to understand that just takes a lot of time, right? 100 hours at least before you start to really grasp what's going on with Bitcoin. But I think we're in this scenario where significant number of companies are going to start adopting this, and success brings more success, right? So you start to see companies that thrive, and you start to ask, why is that company thriving? Why is my competitor thriving? Why am I losing business to this competitor? What are they doing better than I am doing? And how can I copy them, right? How do I beat them? Can I beat them? And we start to see this scenario that is a little bit of a domino effect where, in the traditional finance world, a lot of people think MicroStrategy is a Ponzi scheme, pyramid scheme. They've gone from a $2 billion market cap to an $80 billion market cap, and the traditional financial world like can't wrap their head around it. Now it's going to go from 80 billion to 200 billion to 500 billion, and the traditional financial world is going to have to say, "Wait a minute, was I wrong?" Right? Was I wrong about this company? And what the hell is going on here? And what do they know that I don't know? And that's one of the reasons I think this is going to be the most hated rally of all time, right? Like so many people just hate that there's so much success happening in this space because they just can't conceptualize it and don't understand it. And so we're going to see this evolve over time, where more people are starting to dip their toe in the water and say, okay, well maybe I'll buy it for myself first and understand how this thing works. And then they're like, whoa, hold on, if it's good for me, it's good for a company, right? If it's good for me, it's good for a company. If it's good for a company, it's good for a country. It's good for a nation, right? And you start to go down this orange pill rabbit hole. And I think we're in this point where like adoption is accelerating. Like we're still like increasing at an increasing rate. And I think the next 4 to 8 years, we're going to see that continue significantly. I think we're going to see a lot of companies that are adopting this strategy.
Yeah.
We're already in communication with, a dozen companies on a smaller scale, like private companies that don't have a board of directors to report to, right? They're individually owned companies. The owners are orange pilled. And they're like, well, I want to add this to my corporate balance sheet. I want my employees to succeed here. I want to attract good talent. I want to, do bigger, better things in the future. And like, I don't think I could beat AI, so I have to do something. And this is the option.
Do you think we'll see like a big company like adopting, like Zuckerberg has majority voting rights, and Michael Dell is hinting at Bitcoin for over a year now? I tweeted at him jokingly, like, if you adopt Bitcoin, I'm gonna buy like Dell computers and make miners of it. Like, you should launch miners. Like, I think he's totally into Bitcoin, or maybe Amazon. Like, do you think it needs like a big company to actually really take away, let's call it career risk, or image risk or whatever?
You think about some of these larger companies, and I don't know, you got a CFO of Dell. Like, I don't know who the CFO of Dell is, but I'm sure he's sitting there like, dude, what are you doing? Yeah, what are you doing? Right? Like, you're paying me like $1 million a year. Yeah. Like, I'm not going to buy this shit. Like, you're crazy, right? And so I'm sure there's so much of that going on like a large. If your company's worth more than $10 billion, I'm sure like CFO is getting paid more than $1 million a year, and that's the way that those. They're like, you're crazy. I'm not doing this. And so I think there's a lower probability that we see some of those large scale movers move now, because they don't need to, right? They're successful in their own way, particularly like Mag 7, right? They're Mag 7 because they've succeeded doing what they're doing. So they don't really need to adopt something new. But they can. And I don't think we're going to see a scenario where, Meta comes out and buys $50 billion worth of Bitcoin. I think it's a low probability. Maybe they dip their toe in the water and say, hey, we're going to run Bitcoin for our, commerce in the metaverse. Right. And all of a sudden you're like, wow, okay, that's an interesting concept. And like, maybe that works. And I mean, let's be honest. We already have basically a Mag 7 that holds Bitcoin on their balance sheet. You got Tesla that holds 10,000 or 11,000 Bitcoin. And you've got, SpaceX is a private company. I think they hold something like 8,000, 9,000 Bitcoin as well. So you've already got a couple big companies that are holding it on their balance sheet as an asset. I think kind of where, looking back at what's going on with Elon Musk being in the political sphere, being around Trump and what's going on politically with the Doge, I wouldn't be surprised if he maybe leans in a little bit harder to Bitcoin once he's done with his Doge term, which I think is July of this year.
Yeah,
I think it's July of this year.
Well, he's notoriously quiet about it, don't you think?
Yeah, I think he's exceptionally quiet. And I found out the other day that SpaceX holds Bitcoin, and I was like, holy shit. That was a surprise to me, and that was just completely under the radar.
If you have your Bitcoin in self-custody, where are you keeping your Bitcoin seed words? For me, there's only one way, and it's backing up my seed phrase with stamp seed. It's a single durable plate without any parts or materials. Stamp your words into solid titanium, which is fire-resistant, water-resistant, and built to last. Unlike etching or engraving, stamp seed's patented tools help you to deeply stamp every letter for permanent readability, making it easy for you to protect your generational wealth. Don't risk losing your seed phrase on paper. Get a stamp seed plate for unmatched protection. You can use code BRAM, that's BRAM, for 15% off at stampseed.com.
Well, yeah, no, they hold it for like, I think 3-4 years already.
Yeah.
So it's like old news.
Yeah.
But maybe, if I put my crazy strategy, not strategy company, but strategy cap on, just as like sailors talking about, we should devalue the gold, buy Bitcoin, and then we, wreck all the other countries that hold gold. I mean, you said they are the Mag 7, because they did stuff, but they are also the Mag 7 because they are the Mag 7.
And innovators, right? And yeah.
No, but I mean also because they have the highest allocation in the S&P 500. Like there's
right.
passive investing,
yep.
whether they mess up or not. I mean, today I saw a lot of tweets about the new Mac update that breaks iCloud or whatever. People hate the photo app on the iPhone, right? But people invest in Apple because they are part of the Mac 7.
Mm-hmm.
Let's say Zuckerberg, right? If you adopt a Bitcoin strategy, I mean, I think it's you who's tweeting about, strategy moved this amount of companies in the S&P 500. Let's say you are in the Mag 7 and you adopt Bitcoin, or also could be Amazon, then yeah, you kind of pull away from the Mag 7. You're going to be in a league of your own, right? And then
correct.
Other companies that have Bitcoin on their balance sheet, like Strategy, which is then the biggest, they're gonna move up. So I do think there's an interesting potential for some sort of game theory there, because in essence they are also battling for these passive flows from the S&P 500. Like, I mean, it helps them, of course, to operate their business.
Right. It always helps to be higher up on the ranking. I'm obsessed with the ranking of the market cap ranking of all these companies, because once you get up to the top, like top 20,
mm-hmm.
there's no real good way to compare one equity to another equity, right? Like, how do you compare Exxon to JP Morgan Chase and to Meta, right?
You tweet MicroStrategy between garbage bags and something. I don't know.
Between Sherwin-Williams paint and waste management garbage. Exactly. You're like, we're going higher, right? Like this thing is going higher.
Yes. Yeah. But that's good. That's rational translation, I'd say. Just not looking at the numbers, but more like, is MicroStrategy worth more than a waste management company?
Yeah. That's I think Bitcoin is worth way more than a trash, like the trash companies of the world, right?
Yeah.
So that's kind of the general long-term framework that I operate within. Like either everything else is way overvalued, or strategy and Bitcoin companies are way undervalued.
Yes.
And it's like, okay, I'm going to take the position that strategy is way undervalued and Bitcoin is way undervalued. That's kind of how I view it. But going back to the point here is once you're in the top 20, the only way you can compare these companies is market cap, right? Like they all have different PE ratios. They all have different price to book ratios. They all have different financial structures. They all have different revenue. They all, different products. Like all this stuff is completely different. So there's only one way you can, take a logical, valuation metric, and it's really market cap. So, and once you're higher in market cap, those dollar flows that are coming in the door is exponential, not linear.
Yeah, I'm just thinking, like, does the S&P 500 make sense based on what you just said? Like, does the ranking then make sense? Because what does is it kind of like 80-20? You would say, like inverse Pareto? Is it like 80% of the S&P 500 flows go to the top 20%, or like?
It's something like that. It's really high. Like of the S&P 500, I think Mag 7 makes up like 35%.
No way.
Yeah, wow. 35% of the flows is Mag 7. So it's really heavily weighted towards the top. And just to put it in perspective, right? Like at the S&P 500 index itself, and all the index ETFs that follow the S&P 500, holds 6% of Apple. And like that's just one index bucket holds 6% of that company. Now, if you take that bucket away, what's Apple worth?
Yeah, but this is what I mean. Like this, if you, I mean, I don't want to take it too far, but like the fiat game, is not that transparent in the sense like if all the financial advisors in the world, almost all, I would say, right? They say like, well, you should at least put some percentage in the S&P 500, right? Like basically that's a money funneling operation towards, keeping these mostly American companies, by the way, up there.
Yeah.
Right. So
yeah, and it's really curious when you look at the S&P 500. I mean, the mags, it's something like 10% of the equities in the S&P 500 generate 97% of the return.
Yeah.
And so then the rest of the companies are just floating, right? They're zombie companies just kind of floating there and, moving around, and they've got good credit quality because they're in the S&P 500. They're getting passive flows because of the architecture of the market. The design of the S&P 500 has only been around I don't know how long, but it's got a history, right? Like we're here today in 2025, built upon this architecture of a financial world that was designed, 75 years ago and has evolved into where we are today. And it's inefficient based on the new assets that are around today, the new design of like the economy, and how fast the world's moving.
Yeah. I think that's a great way to think about it, right? Like just think about, okay, there's this thing that is Bitcoin and it just exists, right? And I think, you probably also come across a lot of critics, right? People cannot handle the fact that this thing just exists. Jeff Booth talks about it like it's a paradigm. It's a different thing. And people look from their current paradigm, they look at this new thing and they try to judge it with, all the things or all the ingredients or all the characteristics that they know from their current paradigm. And therefore, it's just really hard to grok. Like you really have to step out of it in order to see it. And maybe to go back to the S&P 500 before we go further into MicroStrategy, because this is one of the things I wanted to ask. So you're tracking MicroStrategy. Of course, it is not in the S&P 500, right? But
Correct.
you're tracking it as if it was, right, based on market cap. As you just explained, like that's the most logical way to track. I think, kind of like two questions into one, because I think there was a certain price of Bitcoin, like $96,000, that should have been held at like the end of March for MicroStrategy to have potential to perhaps be included. Obviously, that price wasn't reached. So, what does that track of MicroStrategy look like? And then maybe to add to that, what is the position or the market cap where it would be clear for you that it's kind of like off to the races, I want to say, or like undeniable that this is the way to, build a corporate treasury?
Yeah. Okay. Yeah. So two good questions. S&P 500 inclusion, we're thinking how this works. Strategy has already hit all of the requirements to get included in the S&P 500, with the exception of one, which is positive earnings. And positive earnings over the last 4 quarters summed together. That's the final, box that they need to tick in order to be to be considered for inclusion. And there's a committee that goes through and determines whether or not they get included or not. And so with the adoption of FASB fair value accounting, which will happen in Q1 here, so it'll happen at the end of Q1 with the May earnings report, we'll hear the new accounting framework, which will be able to allow companies to mark the Bitcoin to fair value at the end of each quarter, which is different than how it's been done in the past. So if there is a large gain, or if there's any gain on the balance sheet for the Bitcoin held during the period, there's potential for a strategy to have significant accounting net income earnings per share, which would then check that last box that needs to be checked for them to be included in the S&P 500. So, all right, last year, Strategy made $12 billion on their Bitcoin holdings, and the accounting wasn't adopted last year. So if they would have adopted the accounting last year, I think there's a high likelihood that they would have had positive earnings, which would potentially get them included. But they've kind of held off on the adoption of the accounting for, as long as they can, which is, I think, a strategic move, recognizing how all of these things move together. So, what would it take? I think the price of Bitcoin is to go up to $95,700 at the end of Q2 now, in order for their positive, or for the earnings for strategy to be positive over the last 4 quarters summed together. And at that point, they would then, be technically qualified for the S&P 500. At that point, there's a committee that needs to come together and say, hey, should this company be included? And I suspect that there's going to be a lot of things that they're not going to like about strategy. They're not going to like the volatility. They're not going to like Bitcoin. They're not going to understand Bitcoin. And there's going to be bewilderment, right? Like there's going to be a lot of hatred, I think, because the market thinks they should be in, and the committee may not think they should be in. And I think that the game theory around this is really interesting as well, because you think about who makes money on the S&P 500. It's everybody that's offering these index products, right? So it's BlackRock, it's Fidelity, it's Vanguard, and there's going to be pressure from those companies to say, hey, I think you should need to add strategy to the S&P 500. I saw that you excluded them based on your committee meeting last quarter, and
maybe I should send less people to the S&P 500.
Yeah, right. And maybe I'll shift over to buying more of QQQ, maybe Nasdaq 100 instead of the S&P 500, unless you include them. So there's going to be a lot of gamesmanship, and just to be a fly on the wall in some of those conversations. I know they're going to happen. So it'll be an interesting, I think that will be one of the biggest stories in 2025 is this concept, which it looks like we're going to have to wait another quarter at least to see what might play out there. But it could be an incredibly exciting thing to watch. If Bitcoin goes back up to all-time highs around 108,000, you're looking at strategy having a $12 billion net earnings quarter, which would be massive, right?
Yeah,
like the company was valued at $2 billion 24 months ago. And like having a single quarter with $12 billion of earnings in a single quarter, that's a huge accomplishment. So it will be just so fascinating to watch this stuff play out, because, the market is going to disagree on so many things, right? Like, is every one of those dollars of earnings from the Bitcoin, should that be treated the same as earnings from NVIDIA? Or Meta, or
PE wise also.
Right. It's how do you value the company? Should it be valued on a Bitcoin standard? Should it be valued on a fiat standard? And there's just going to be so much push-pull argument, right? Like we're going to see that happen, and I think that we're going to see a lot of oscillation in the price of the stock moving forward because of that.
Yeah, I love that. What you just explained. I'm thinking like this is the clash of the zero-sum game and the mutually beneficial game, right?
Correct.
Like, if BlackRock is going to advocate for, S&P 500 inclusion of MicroStrategy because, it would benefit them. That's the entire point, and therefore benefit more of Bitcoin. Like that. Yeah, that I love. Because you're forced to change your thinking. Basically, once you're confronted with Bitcoin, whether you like it or not, right? So even if you're in the S&P 500, let's say the top 20, and like 3 companies adopt Bitcoin and you hate it, you still have to look at it. That's why I love that thought. Like you have to do that. So you just mentioned also, MicroStrategy is a Ponzi, is a pyramid scheme, whatever people use and intertwine and mix. They usually don't really know the definitions. Yeah, what if I would ask you, like, what's the top 3 FUD or misunderstanding of MicroStrategy? Like, how would you disperse that FUD, or just kind of explain what they are doing? And one thing to add, because I also wrote down, they borrow free money. How does that work? I've seen people say that.
Yeah. I think one of the biggest things that most that the market misses is that they say that strategy is going to fail, right? Or they say like this is going to be the next FTX, right? This is going to be a blow up, right? Like this whole thing's going to blow up. They're super over leveraged, right? Like we've seen the articles come out, and anybody that says that hasn't looked at the financials, or they haven't looked at the actual balance sheet of the company or the financial strength. Right. And so I've got some of the numbers pulled up here just for reference, right? Strategy holds $43 billion of assets, So their Bitcoin as of today is worth 43 billion. And the debt that they have on the balance sheet is 8.2 billion. Okay. So there's a huge buffer, right? They've got effectively 5 times as many assets as they do debt. And so their leverage ratio is around 20%. So when you put that into perspective here, you're like, okay, well, what are other companies' leverage ratios? And you start to look at the rest of the market, and the rest of the market has 70, 80, 90% leverage ratios. Like they just have, right. They've got a lot of debt relative to their assets, and that's what I mean when you start to compare like some of the top companies, the financial companies, or even just companies in the Mag 7, right? They've got pretty high leverage ratios. They're leveraged, right? Like that's how the fiat system works. You borrow money to take on a project to, make more money.
I would say you are incentivized
You're incentivized to do it. It's tax efficient, right? There's so many there's so many designs that it makes sense to just take on debt and build a business that way.
And if you say assets, right, of these other companies, that could be real estate or land, like that is probably pretty solid. But everything after that, IP, machinery or computers, whatever, like, I like this because if you go down, the steps and then compare that to Bitcoin, then Bitcoin is superior to every other asset that the company can hold, right? So what's the fair value for MicroStrategy if they have a lot of the best asset to hold in the world?
Right. Exactly. That's a good question, right? Like that's what everybody's trying to figure out. and the reason I bring up this leverage ratio, which is important, a lot of people are really focused on this this cost basis, right? I think Strategy's cost basis for their 520,000 Bitcoin, something like, I don't know, 67,000, 69,000, I don't know, something like that. And they think that if the price of Bitcoin goes below that, like Strategy's going to blow up, which is just the most false statement of all time. Right, like if the price of the Bitcoin goes down to just 69,000 or 67,000, oh darn, they have $35 billion of assets and $8 billion of debt. Right,
this is the point. This is the point. Yeah.
Oh darn, right? Let's say it goes down to 50,000. Okay, well now you've got $27 billion of assets and $8 billion of debt. Like the company still works, right? This company's still actually incredibly financially strong.
Isn't the goal of leverage to borrow money to actually do something that is eventually worth more than what you borrowed?
Right.
I mean, this is a simple financial mind here, but isn't that the whole goal? As long as you have something that is worth more than what you owe, you're basically in the green. Let's call it in the green. And even companies that are 90% leveraged, that stock is still being bought. So
yeah. Right.
It's irrelevant. It's a weird argumentation.
Yeah, and like just a number to put it in perspective, right? Like first of all, of the debt that they hold on the balance sheet, none of it is encumbered. That means none of it is actually tied to the Bitcoin that they hold. Right? There's no margin call. It doesn't exist. Right? There are people yelling on the internet. They're going to get margin called. Bitcoin's going to get called. They're going to have to sell their Bitcoin. It's like, no, that's just so wrong. Like it couldn't be more wrong. And just to put it in perspective, the price of Bitcoin would need to fall to like $16,500 for an extended period of time before the assets are worth less than the debt that they hold on the balance sheet. So it's an astonishing number. And you start to think about like, okay, how do you manage risk here? Like, what does that look like? And that's some of the stuff that the strategy team is conceptualizing. The reason this works, right? As I mentioned earlier, right, in thinking about how insurance companies can add these new products with different risk return metrics to their balance sheet, right? Like an insurance company can hold strategy preferred stock, but they can't hold Bitcoin. Now, what strategy is doing is they're using the position within their capital stack as collateral. So that risk position within their capital stack, they're using that as collateral to design these products with different risk return metrics for the market. So the convertible debt, for example, in the event of a bankruptcy, the convertible bondholders get paid first. And then it's the preferred stockholders. And then it's the convertible preferred stockholders. Then it's the common stockholder. So you think about, okay, now I just monetized the collateral position of my capital stack. And the reason this is like really valuable is because the products that they're offering to these different tranches of risk, right? They have reduced upside, so the upside is capped, and that they have reduced downside, and the downside is capped, right? You've reduced the risk, you've de-risked this this product that they're offering to the market. Now, the benefit, right? Like the common stock shareholder benefits by taking on the excess volatility to the upside. So you get to take on excess upside, but you also take on excess downside. Now, for most Bitcoiners, you're like, Bitcoin's going to be here forever. It's not going to zero. Like zero is chopped off in my mind on Bitcoin. So for me, it's like, yeah, I want to take that excess volatility that these bondholders or these insurance companies or pension funds can't stomach because I believe in Bitcoin. And that's why they're increasing Bitcoin per share into perpetuity. They're offering these reduced volatility products to the market, and that excess upside and excess downside is getting delivered to the common stock shareholder via Bitcoin yield.
Yeah. I kind of say, Bitcoin is a asymmetric opportunity based on publicly available information. Would you say that MicroStrategy is similar, but in the TradFi world?
Yeah, absolutely. Absolutely. I mean, I used to work in reinsurance and insurance. I left 3 months ago, and it was hilarious. Like I would walk around and talk to some of these people in London and Bermuda and New York, and I would talk about Bitcoin, and I just get laughed at. Just get totally laughed at. And yeah, it's so fun. And meanwhile, my response to getting laughed at is like, at the time, Strategy was holding $20 billion of Bitcoin. And I would say, like, look, this company is holding $20 billion of Bitcoin, 20 times larger than your company, and that like made people pause a little bit, and then they would just keep laughing at me and go on. It's like, you're crazy. And
I think this is fiat brain. I mean, I experienced the same. It's because when you work in TradFi, you're playing around with money that's not yours. Like there's zero agency, like there's no conceptualization of, just of the numbers. Like it's like in my experience, the people in TradFi work with money as if it's not real. The real value basically. But there's a certain mindset to that. And once you step out, I mean, I always walked into the big bank in the business district in Amsterdam with my Bitcoin button on my backpack, and I walked in. And
I did the same. Like, I had a little badge. Yeah, I had a little Bitcoin. Yeah. I would go into meetings and people would be like, "What is that pin on your suit jacket?" And I said, "It's a Bitcoin pin."
I love that.
Yeah.
What's MicroStrategy's end goal? So how I've understood it, I checked it with you, but also with Ben Workman before I literally poured like everything that I still had liquid into MicroStrategy. For me, it's I think the simplification is a portal from the old money to the new money. They have basically opened the door and are facilitating TradFi with, let's call it, custom products for different type of buyers, as you mentioned before. And they're turning that dirty fiat money into pristine Bitcoin collateral, and then it's rinse and repeat.
Yeah. In my mind, Strategy is the bridge and the road to a fully Bitcoin denominated future, right? They are going to be the largest financial company in the world, right? If Bitcoin continues to go up, and we think that this network is capable of holding capacity, like monetary capacity of the world, they're going to be the largest company in the world.
So a Bitcoin native bank?
Yeah, I think so. I mean, in terms of what that exact future looks like, I mean, who knows, right? Like this world is moving so quickly and so fast and evolving so quickly and so fast. There are going to be designs and products of things that we can't even fathom 5 years from now. We're going to look back and say, wow, holy cow, 5 years from now, 5 years ago, we had no idea this existed. I think some sort of financial operations absolutely makes sense, whether that be offering lending products or stable coins or insurance or different types of products into the future. But I think one of the things I'm most excited about is just the optionality, right? It almost doesn't matter right now because they're already leveraging the Bitcoin on the balance sheet to make more Bitcoin, right? To buy more Bitcoin. And that's something that a lot of people don't realize. Everybody's like, what are they going to do in the future? The future is now. Like, the future is already happening. They're already leveraging, they're creating these new financial products for the traditional financial world by leveraging the collateral of the position of the capital stack. People don't get that. People don't get that, right? They're already using it. Like, their Bitcoin is the collateral. It's the best collateral on the planet. Now you have this, the corporate balance sheet itself that sits around all the Bitcoin is the transformer, right? The corporate balance sheet transforms the asset into a different tranche of risk that has got different risk return metrics.
And that is already so interesting, because the only edge is Bitcoin, right? So Bitcoin is already putting its stamp or planting its flag, like in let's call it the finance world, right? And like you said, I think the direction is towards Bitcoin, eventually. And what I liked from what I took away from one of Saylor's presentations was, when we bought Manhattan, we didn't know it was going to be, New York, or when we bought, what is it? I don't know. I'm not American, so I don't know, like, the other things. But,
Louisiana
New York is just that example. Like, if you understand that is like a pristine piece of land, with the ocean and the rivers and etc. Like, okay, and like the Dutch, I'm Dutch. And the Dutch were really smart, and they put it like near this, place in the water, and they know their stuff. Like, that's what we need. Like, that's where we need to build, a colony in a city, etc. But how that's going to look like, no clue. But that bet was a great bet, and I think that's how Saylor talks about it, right? Like, okay, if this is the capital of the future, if this is the land of the future, like, I need to plant my flag and be in that land. And if people flock to that land, then the opportunities will arise. Right?
Yeah. And as, I mean, just like what happened with me, right? I mean, as the value of these assets continue to grow, more people are going to use the term escape the matrix, right? Like, more people are going to exit and identify opportunities of how to continue to grow this ecosystem, because I'm indebted to it, right? I'm like indebted to the Bitcoin ecosystem, and indebted to, growing and building this thing, because it will just continue to add more value to me and my family and my friends, like into the future, into perpetuity. And I love the concept of, right, it's not a zero-sum game. We can all work together and win, which in the fiat world, it's such a sick feeling when you go to New York and you're like talking to some of these people, and like, it's just very clear that it's like just kind of dirty, right? Like, they're just all trying to get an edge and like try to beat somebody or steal somebody's business or do something like that. And it's just incredibly refreshing meeting and chatting with Bitcoiners about business and finance and capital and what this stuff could be.
Yeah, I couldn't agree more. I think it was Jeff Booth that said it's cooperative competitiveness. And I really I said mutually beneficial, but he said cooperative competitiveness. It's like, that's it.
That's it.
You go from zero sum, you go to that. So even if we don't really know where MicroStrategy is going, I mean, so in my mind, it's, I call it like Bitcoin native bank. Like, like you said, there could be strategy coin, like a stable coin, properly backed by Bitcoin, for example. It could be anything, but what do you mean what do you think this means for banks, insurers, etc.? Like, I think what we talked about is like, there's an imperative to move. You see more and more banks, by the way, also talking about, with the repeal of the SAB 121, they can offer these custody services, etc. They're going to move into it, because there are many. There's many research that also already shows, millennials, Gen Z are way more into crypto, Bitcoin, etc. Like, this is the new world. They have to move towards that. But the insurer that I worked at, we always called. So I worked in the innovation department. They always talked about like burning platform, right? Like, they know that I don't know. There's like 30,000 fintech startups in the world, and they all pick like a little piece of a big financial corporation, but then they do that better, right? Like just home insurance, or stuff like that. So these big TradFi companies are basically already all unbundled, and they see that it's happening, but the premiums that they collected will last them for probably like 20 more years if they just keep it as a cash cow, basically. My question is more, what do you think will happen in that space? Do you think Bitcoin will be the big, let's call it the unbundler, or maybe the I don't know how to even call it. I wanted to say like the bomb, but it's not what I mean. But like, yeah.
Yeah, I think we're approaching an adapt or die scenario for like the larger part of the financial services industry, right? And it's going to happen over time. It's going to take so much time. I think a lot of people underestimate how much time it takes for large capital to move and really understand what's going on. So, I don't think it's this year. I don't think it's next year. I think within the next 4 years, though, 4 to 8 years, we're in this adapt or die scenario where companies are really going to have to rethink their business model. If you've got other companies like, like Strategy just eating their lunch, whether it's, offering a lending product or a new, it can evolve. It can evolve very quickly. I think there could be some decoupling, right? The companies that do adapt here are going to continue to win if they are truly, buying this asset to hold for a long term and adjusting their business model to accommodate it.
Yeah. You mentioned before, basically I wanted to ask you why or when will the bewilderment intensify? You mentioned before, you think it's going to 100 billion, 2, 3, 4, 500 billion. I heard you say 1 trillion before. Like, when will it be apparent that this is undeniable?
Yeah, what I think can happen is, right, like Strategy could go to 200 billion, 500 billion, or $1 trillion, and the market's going to freak out, right? Like the whole market's going to just totally freak out. What's going on? What is this company? Bitcoin's a Ponzi. All the narratives that we've already heard like 6 times in the last few run-ups and blow-off tops, right? Like March and November. Same thing's going to happen again. It's just going to be on a larger scale, and everybody's going to short it. It's going to go back down, and Strategy is going to have raised a ton of capital in the meantime, bought a ton more Bitcoin. They're going to go down, and it's going to go from $750 billion market cap down to a $250 billion market cap, and then everybody's going to get bullish again, and it's going to go right back up. And so I think where people really start to recognize this is like a sustained $1 trillion market cap, like with the bottom being $1 trillion. Like all of a sudden you have to take it seriously. Like this company is, if they go up to 2 trillion and come back down to 1, that's like that company's going to stay here and it's going to be around for a while.
What's your timeline for that?
Like, do I buy calls?
No.
No,
I just model.
Yeah. It's, I think it, I mean,
not to be like overly bullish, but more like what, just objectively or just realistic, not realistically, but just like rationally, like what?
Yeah, right. We're 2025. 4 years from now is 2029, and 8 years from now is 2033. Right. Like honestly, the 2032 horizon, I think, is when we get to this 1% of Bitcoin left behind over the next 100 years. That's I don't want to say the end of the gold rush, but like it's saturated, right? Like it should be saturated by that point. And 8 years of working in this stuff, we're going to see it's going to be fireworks, dude. The next 8 years are going to be just all sorts of just crazy news in this stuff. Like it's going to be a lot of fun. Yeah.
I love it. Yeah. I got this question from X, and I'm going to ask our friend Richard Byworth the same. But now that I'm talking to you, I thought this is a fun question for you too. Yeah, you are the CEO of Strategy for a week or a month. Or what's your next move? What's your first next move?
That's a really good question. I would start a Bermudian-based reinsurance entity and start attacking the insurance market. That's what I would do.
Like that. I know Richard's answer already, but I'll let you know later on.
Yeah. Look forward to seeing it. Yeah. Okay. No, I would be, well, I'm obviously biased because I've got an insurance background, but the insurance industry, I think, is ripe for innovation and just to get eaten by this industry completely. Yeah. Yeah.
Well, I agree.
Because there's these lids on innovation, but from regulation and rating agencies and stuff, it's just like if you find a way in, or which I know of a few ways in, and so does Ross Stevens at Stone Ridge. But once Like there's just a huge moat. Like you could just start eating the industry without the industry having any ability to fight back because of the regulation and the rating agency involvement. So that's an interesting space.
Maybe you should start that company.
Yeah, it's a thought.
So just like we're memeing Bitcoin into existence, decentralized retail investing communities are becoming imperative for success in a modern day, as we've seen with, you guys teaming up, talking about MicroStrategy. I don't know how big the irresponsibly long MSTR group is now, but tens of thousands of people, I think. Mm-hmm. Now you're joining Sailor on stage at the, their event strategy world. Yeah, how do you see the future of investing or like these communities evolve? I mean, this is really showing the power of the internet, I think. Is this kind of like the new school of investing, you think?
Yeah, absolutely. I think this is the way investing is trending, right? GameStop really kind of kicked the door open on taking down TradFi, right? Tackling TradFi. And this is the new evolution, right? Where you've got this new product, new innovation, companies adopting Bitcoin. The Wall Street Journal isn't covering this, right? Like nobody's
exactly
right. Like I'm not grabbing my coffee in a Wall Street Journal and sitting down in my cafe looking at what strategy's doing. Like it's just not happening. The world doesn't move like that anymore. And like last night I talked about it in our live stream, right? Like everybody knows if like Jerome Powell picks his nose, like is that dovish or bullish or bearish, right? Like so everybody's on this hyper speed trajectory. You've got bots that are moving at the speed of light and just fast as shit. So, but I think the decentralized nature of people that are following stocks and communities building around that is the way this just continues to move. I think it's completely inevitable. We've seen it with Palantir. We've seen it with like AppLovin. We've seen it with NVIDIA, honestly, Tesla, and even Amazon. Like when Amazon first came out, like you've got these communities of people that know what's going on, but the internet has made that more accessible, and the cream rises to the top, right? Like the people that are talking about this stuff, that know what they're talking about and care and put our time and energy into it, they kind of like elevate into these leadership roles, which is what I've really kind of found myself in. And it was one of these like, oh my God, I have to do something with this, or like this is just going to fall apart. Right? It's like I just felt this need to create something because this movement is larger than me. Right? This is way larger than me. And if there's a group of cohesive people that have a calm head and understand the trajectory and the long-term nature of this equity and this trade, like that, there's a ton of value in that. Whereas, some of the challenges that I think GameStop had is like Roaring Kitty was out here as like one guy, right? Like posting his screenshots of like, I made $200 million. And then like everybody relied on that one guy. There's a ton of pressure on one person, right? Ton of pressure. And now we're in this new scenario. It's like, okay, well now let's think about a group, and a group where everybody's got a role, right? Everybody's working on different things. Everybody's operating efficiently and providing info and alpha to the environment of, what's going on here. Because it's a complicated equity, right? It's like, that's why we're talking, right? Nobody, like a lot of people don't get it. So, my role is to talk to people about it and continue to, spread the word, I guess.
I think I love that because it's. I think it's similar with Bitcoin in general. I mean, I experience it with doing a podcast like this. It's and for MicroStrategy, or for example, you guys have helped me a lot to get insights and learning along the way, right? But it's. I think that's where the edge really is. Like that's where you the opportunity is only apparent if you kind of like look at it. That sounds very simplistic, right? But it's more like, if I think I got like MicroStrategy built in 3 days and like 4 videos, and then seeing discussions, and I'm like, okay, these guys know what they're talking about. And I knew that already because it was the same with Bitcoin, right? Like if I look at someone who has like 35 years in the risk chair, Greg Foss, and he said he gives me a rational explanation of Bitcoin, I'm like, what the fuck do I know? Like, okay, this guy just explained it to me, and I'm totally following along. Like, okay, this is it. Like, just like that. And so I love that, and that's also still why I love Twitter X in that sense. Like, you can find people like yourself, like Ben Workman, just like I said, before we started talking, like we're just nerding and just sharing that on the internet, and anyone can pick that up, and then you can do your own due diligence and take your own action on that. But yeah, that's super accessible now. All right, I want to ask you my last question, because I ask everyone the same question at the end, which is, what is a core belief that you will never let go of?
That is a good question, man. I should have prepared for this. What is a core belief?
That's why I don't send it to you.
Yeah, what is a core belief that I'll never let go of? Man, honestly, stay true to your heart. Like listen to your gut, and keep the people around you, right? So one of the things that I continuously live by, that you're the average of the 5 people that you spend the most time around. Like I always strive to spend my time around some of the brightest people that make me a better person and make me positive and happy to live. So, and for me, it's like my wife, my dogs, and my friends that I've made in this community, and some of my close friends from college. So, yeah, I think that's
awesome,
it.
Man. Thanks for sharing, and thanks for this insightful conversation, man. Happy we connected, and happy to do it again. Thank you.
Absolutely. Looking forward to it. Thanks for having me on. I appreciate it. We've got a show, MSTR True North, happens every Wednesday. We also have a podcast called the Hurdle Rate Podcast that I'm running with Ben Workman, Tim Kotzman, and Strive CEO Matt Cole. And we've got a lot of exciting things in the horizon. I know the MSTR True North community is building a lot of things at the moment. So a lot of things are going to pop out here the next 6 months. So stay tuned, follow along, and excited, glad I got a chance to talk on here, and look forward to the future.
Awesome, man. I'm linking to everything in the description, of course, so people can check it out. Cheers. Thank you.
Thanks. See ya.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode.